Hi everyone, a very good evening to one and all. I'm sure you're very excited to understand the do's and don'ts you need to do while filing tax. So I am Steffi. I am here to host the webinar, and along with me, I have CA Nupur Parma. She's a chartered accountant directly specializing with 4+ years of experience in direct taxation. She has a lot of experience when it comes to tax, and I'm sure you would have a lot of questions because tax filing season is up on. Many would be filing, many would be confused which form and what needs to be done. So I won't take much of your time here. So we have Nupur who will take you all through the do's and don'ts while filing your income tax return. So pay attention to all the minute details she is here to share with you guys. If you have any questions, you can drop by in the Q&A section. Towards the end of the session, she'll answer all your questions which you would have. Over to you, Nupur.
Thanks for the introduction. Hello, everyone.
I cannot see the video. Maybe you can. Can everyone see the PPT? Can everyone hear Nupur? Can you speak, Nupur?
Hello, can you hear me now?
Okay, maybe reshare the PPT.
Yeah, I'm trying to do it. But my voice is audible, right?
Yeah.
To know it was shared, right? I'm not sure. Just give me a minute. Can you just try from your side?
Sure, I'll just try from my side. We are so sorry for this technical glitch. For some reason, we are not able to share the screen. Just allow me a minute. No, let me just check the backend once. Nupur, just try sharing the screen directly.
1 minute. Can you try to add that presentation again?
Yeah. Can you see my screen? Can everyone see my screen? Can you all hear Nupur as
shows
well?
it shows loading.
Can you all see the PPT yet? Nupur, now can you see the screen? Because it's
No,
loaded at my end.
no, it still shows loading for me.
Okay, hold on. I'll share my screen.
This is visible.
Is this visible?
Yes.
Great.
Can I start? Can you guys hear me? So good evening, everyone. We are so sorry for the delay, the technical glitch that happened in sharing the presentation. I hope you all are doing well, and I thank you all for taking time to join today's session. We are very glad to have you here for this webinar on income tax return filing, specifically do's and don'ts while filing your income tax return. So as we approach the deadline for filing income tax return, it's very crucial to ensure that we are not just filing the return, but we are filing accurately. We are filing on time, and we are filing with all the compliances that is with the current tax laws. We are updated with the current tax laws, and we are filing it very accurately. So today's session is specifically designed to help you better understand the entire filing process, to avoid the common mistakes that you make while filing your return, and to take the advantage of all the applicable deductions and whatever benefits are applicable. So we might know, or we are already familiar with the process. Many of you might be familiar, but still there are many people who might be filing the return for the first time. So regardless of your experience level, this session will provide a clarity, updates, and practical tips for your smooth filing process. So I just wanted to quickly raise a poll. So I just wanted to see like how many of you have filed your return for how many times. So can you just answer your polls? So I can see like the audience is divided in the good proportion. Like many have filed more than 5 times. There are many people who have went filed till now. So no worries. We'll cover all the concepts. We'll go through the entire process of the return filing. So here is a quick overview of what we will cover today. So first thing we will see is what are the do's and don'ts while filing your return. Then we will see what are the common filing mistakes that you can avoid. Then we will go to the important points for filing the return for this year, that are what are the key changes in the tax rule for the current assessment year. Then we will also go through overview of current tax slabs under both the regimes. Then we will compare both the regimes, old and new tax regime. We will see which regime is more beneficial based on the income type, with examples for better understanding. And at last, we will see a walkthrough on how to file your income tax return using the ClearTax platform. And at last, we will have a Q&A session. in between, I will be running few quick polls during the session to understand your experiences and challenges. So I request you all to participate it, and also feel free to drop your questions in the chat. We will try to answer as many as we can. I have a colleague with me, Sonam, who will be answering them during the session. And at last, I will be taking the remaining one. So without further delay, let's get started with understanding what are the basics of ITR filing and what you need to keep in mind this year. So first thing we will see here is many of us unknowingly select the wrong ITR form that will not match your sources of income. For example, ITR 1 is used for the basic ITRs. Like if you have only salary income, interest income, and one house property rental income, then you will have to file the ITR 1 only if your income is up to 50 lakhs. But suppose if you are having additional capital gains, and if you are having multiple house properties, or if you are having some freelancing income, then you will not be eligible for ITR 1. So first thing before starting the ITR filing journey, you will have to understand is what is the ITR that is applicable to you. So first you have to list down all your incomes. Based on that, you'll be able to decide what is the which ITR is applicable to you. So if you're filing through ClearTax, you'll not have to worry on selecting which ITR you have to choose while filing your return. Because in ClearTax, you just have to input all the details. Software itself will select the applicable ITR to you. So you'll not have to worry on that. So why choosing the correct ITR is important? Because filing with the wrong form will make your return as defective. So once the return is considered as defective, you will receive a notice from the income tax department asking you to rectify that defect. So if you're not responding to this defective return, then your return will be treated as invalid and it will be considered as not filed at all. So it's better you understand your income sources clearly, like what all income you have, whether you have salary income, house property income, capital gain income, if you're having any foreign stocks, if you're having any foreign income, any business income, try to get all the information, then understand which ITR is applicable, then select the correct ITR form. So if you are in a doubt, you better consult a tax expert or use a trusted e-filing platform that will recommend you the correct form based on what all you're inputting. Next, the common mistake that user do is quoting the wrong assessment year. So while filing your income tax return, you will have to understand there are 2 years. There are 2 terminology used. One is assessment year and one is previous year. So assessment year is the year for which you are filing the return. Like if you are filing the return for assessment year 25-26. But in that year, you will reporting the income of previous year 24-25. So the income that you have earned will be considered of previous year, and the return and the year in which you are filing the return will be considered as assessment year. This is the major difference. So now for the current year, previous year is financial year 24-25 and assessment year is 25-26. So for this year, for both financial year and assessment year, it will be always starting from April and ending with March. So whatever income you have earned during April 2024 to March 2025 should only be considered while filing the return for this year. So why this is important is if you're selecting an incorrect AY, that will cause the credit mismatches. Like if you have received a TDS of any previous year and if you're reporting in this year or vice versa, then that will give you a notice again. or it can also lead to double taxation. Like that income might be reported in the previous year also without checking the year, and again you're reporting it in current year as well. So it's better always you check when the income in for which year you're earning the income and in which year you're reporting that income. So that's the most common mistake that user usually makes. Next, coming to the next slide. Few users furnish incorrect personal information. Can we go to next slide? Yeah. So few users often overlook simple, but these are very critical personal details like your name, your PAN number, your date of birth, your current address, your valid email ID and phone number. So most of the users get a name mismatch error. So you must always keep in mind that your name, which is as per the PAN, should only be mentioned in your income tax return. Suppose for an example, my name is Nupur Parmar. So I have to report my first name as Nupur and last name as Parmar. If I am reporting as first name as Nupur and last name as P, that return will get rejected. You will get an error while submitting your return. So you always check whatever name is mentioned in your PAN records, the same name should be used while filing your income tax return. Then PAN number as well should be the same. Your date of birth should always be the same that is present in your PAN and as well as on income tax portal. Then current address. So these details are used for your identity verification. In case of any communication or in case of any tracking compliance, this detail will always be useful. So if there are errors in PAN or date of birth or name, your returns will get rejected or it will be flagged on your income tax portal. But if you're providing a wrong email or wrong mobile number, that means you might miss your important notification or notices from the income tax department. So usually income tax department mail you with your acknowledgement starting when you file your return. Then if you receive any notices or if your refund is getting processed or if your return is getting processed, they always mail you. So if you're providing an incorrect email address, you might miss all your communications. Then if you're claimed a refund, then your bank account details should also be provided very correctly. So make sure your bank account details are always correct and they are pre-validated on your income tax portal. So in your income tax, if you're creating any new bank account in any of the year, then make sure you add that bank account on your income tax portal and you pre-validate it. So once the account is pre-validated and you have already selected it for refund, then only you will get a refund in that account. Otherwise, your refund might be blocked. So here a best practice will be you always cross verify your personal details with your PAN database or your Aadhaar card. And you always pre-validate your bank account on the e-filing portal before filing your return. And many people do not report all your incomes. Like you might be receiving interest from savings bank or fixed deposits. So many of us forget to report that interest, the income that is earned from savings accounts or fixed deposits or recurring deposits. But what will happen if you don't report here? So banks will deduct TDS, but still you will not report the gross income. So this non-reporting of income will trigger a mismatch with your Form 26AS or AS, resulting in a notice. In later slides, we will understand what is this Form 26AS and AS. But for now, I'll say that there is one form called Form 26AS or AS where all your income details will be captured. So if you miss to report it in your income tax return, and if these details are present in these forms, then you might result in getting a notice. So it's very important that you report all your interest income as well. So whatever income you're getting in your 26 years or AA should be reported in your income tax return. Suppose if you're getting any exempt income, like interest income from your PPF or agriculture income or your maturity from LICs, you might think that these are the exempt incomes. But still, it's always advisable that you report this exempt income under a schedule called exempt income. So this will help the income tax department to understand that, okay, this is the income that you have received and this is exempt under this section. So your better practice would always review your Form 26AS, your AAS or your bank statements before you filing your return, so that you declare all your sources of income, even if they are tax exempt, you have to disclose. So that will prevent the transparency, or that will give you a transparency and prevent the future scrutiny. Next, moving to the next slide. Now we will understand what is Form 26AS. So Form 26AS is a consolidated statement which is issued by the income tax department. So this will contain all the vital information such as your tax deducted at source. Either it might be from your salary, from your interest income, from your rental income, tax collected at source, or advance tax payment, self-assessment tax, or refunds that you have issued by the department, or high value financial transactions. So your 26AS is a kind of a statement that will give you the details of all the tax that has been deducted by the department against your PAN. So that might be through multiple sources. So here I just wanted to raise a poll. Like, how many of you really know about this 26AS, or check your 26AS before filing your return? It's very good that half of the audience knows at least what is 26AS. And for the rest of the people, don't worry. We will understand now what are these forms so that you can check it while filing your returns. So it's always helpful for a taxpayer that it's cross-verified from your 26AS. Like if you're a salaried individual and you're receiving a salary income, then you might have all your tax deducted details in your Form 16. As well as that tax deducted details will also be present in your 26AS. So apart from your salary income, if you're receiving any interest income from any of the bank where tax has been deducted, then that will be reported in 26AS. So anything other than salary will be found in 26AS only. And there is one more statement called annual information statement, which is your AAS. So this is a detailed report that has been provided by income tax department. So this also includes your interest income, your dividend income, your securities, like whatever you have redeemed your mutual funds, or if you have purchased any new mutual funds, or if you have bought any new stocks, or if you have done any foreign remittances, all these details could be found in your AAS report. So 26AS will have only those details where tax has been deducted, whereas AAS will have all those details irrespective of whether tax has been deducted. If you receive any income then it will be reported in your annual information statement. So it's always recommendable you review both your Form 26As and AAs before filing your return to ensure you report the complete income and you claim the entire TDS credit. So if you do not report, or if you're not reconciling these statements, then there will always be incorrect or incomplete tax credit, or you might land into more tax payable because you're not claiming the tax that has been already deducted against your PAN, or that will result in lower refund, or you might receive notices because you have misreported your income. So there are many consequences that might lead of underreporting of your income. So it's always recommendable you download and review your Form 26As and AAs before filing. You can find these two statements on the income tax portal. So in ClearTax, there is an option where you can upload the statement and will auto fetch both of details from both of the statement. You don't have to check each and every in your forms. You just have to download from income tax portal and upload it on ClearTax platform, where we will auto read all the details. So you don't have to worry on this. Moving on to next slide. So as we have already discussed what will happen if you don't reconcile between your 26A and AAs. So in this slide, we will discuss what will be the consequences if you are switching a job, or if you have Form 16 from 2 or more employers. So when you are switching a job within the same financial year, like we have discussed, a financial year starts from April and end till March. So during this period, you might have switched one job or multiple jobs. So in that cases, most of the users will get a tax due. So we'll understand how it comes and what will be the compliance over here. So if you're switching a job during a financial year, every employer will issue a separate Form 16 to you. So each Form 16 will only reflect the income that has been earned and the TDS that has been deducted during that specific employment period. Like now, if you have worked from April to September for employer A, so your Form 16 of employer A will contain a salary detail of only employer A. And from October to March, you have worked with employer B, then your Form 16 of employer B will contain the details of only of your employer B. So what will happen now? Suppose if you have earned 5 lakhs from employer A and 5 lakhs from your employer B. So your employer has deducted tax based on 5 lakh income only, whereas your employer B has deducted tax based on 5 lakh income only, because from both of the places you have earned 5 lakh rupees. Now while filing your income tax return, you upload both the Form 16s. So now when we club both the Form 16s, your income will be 10 lakhs. So now while filing your return, tax will be calculated based on your 10 lakhs income. So entire slab rates and all the calculations will change based on the 10 lakh income. Whereas your employers have calculated the tax only based on 5 lakhs income each. So that's why while filing your return, and if you have switched a job, there will always be a tax due. So one thing you have to keep in mind is there is an option to declare your previous employer's salary. So while switching your job, like in our case, from employer A to you're joining employer B. So while joining your employer B, it's recommendable you provide your entire salary details that you have earned from employer A to employer B, so that employer B will calculate the tax considering the total of both employer A and employer B, and you don't have to pay an additional tax while filing your income tax return. Your employer B will calculate the TDS and they will reduce the taxes based on both the employers, and you'll not have to pay the heavy taxes while filing your income tax return. So it's always advisable you declare your previous employer's salary to the current employer, and make sure you report the salary from both the employers while filing your income tax return. Moving to the next slide. So most of us, while filing your return, once the return is filed, they forget to e-verify the return. So there is one more step while filing your return, which is called as e-verification. So once you submit your return, it is not complete until you e-verify it. So if you're not e-verifying your return within the allowed time, your return will be considered as invalid and it will be treated as it was never filed. So it's always better you e-verify your return as soon as you file it. But there is still a time gap of 30 days. So you have to e-verify your return within the 30 days of filing. So there are different options of e-verification. Like you can e-verify through Aadhaar OTP, you can e-verify through net banking or bank account or demat account. But the easiest way here to e-verify is through your Aadhaar OTP. If your mobile number is linked with your Aadhaar, then while filing your return, you just have to click on e-verify the return, you will receive the OTP and you have to submit it. In case if you're not mobile is not linked with Aadhaar, then we have other options where which is net banking or bank account or demat account. So it's always recommendable you e-verify your return as soon as possible. Make sure you e-verify it within the 30 days of time. Then many of us ignore the notices or the communication that are sent by the income tax department. So what will happen if you ignore these notices? Like many of us might receive mails which we don't even see on daily basis, or many of us might have changed the mail ID or contact details which are not updated on income tax portal, which will lead to missing of these mails or information. You're telling something? Can I continue the webinar?
Yeah, no, Puri, you can.
I heard some noise.
Continue, no problem.
Yeah, sure. So it's always better you follow up with your mails, your messages that you're receiving. Like if department even sends the letters through post, like if you ignore the emails once or twice and if still the notices continue, so department even sends the letters through post. So that's why I have mentioned in the earlier slide that you have to give your correct address details. So there are different type of notices that you might receive. First is for your defective return. Like if you have not reported any income which is present in your 26 AS or AS, you might receive defective return notice. Then next is your intimation. Like if you have filed the incorrect return, if you are getting any additional tax due, then you will get an intimation under section 143(1). If you have reported any income like not correctly or partially, then you will get a notice for under reporting your income. Suppose if you have filed your returns and it got processed for this year, still department can scrutiny or reassess your notices. So you might get scrutiny or reassessment notices as well. So nowadays department is also sending the notices to rectify whether the deductions like your ATC, HRA that you are claimed are correct or not. So you might receive notices for that as well. So ignoring all these notices can lead to interest, penalties, or even prosecution in the extreme cases. So delayed responses will reduce your ability to explain, or they will reduce the chances of correcting the issues. That's why you regularly monitor your income tax portal dashboard, ensure your email ID and phone numbers are updated correctly on income tax portal, and always take correct action so that you can file your revised return still within the time, or you can pay your additional taxes without any additional interest and penalties, or you can submit your explanation or documents online without visiting it on the income tax ITD. Next, moving to the other slide. Now we will see what are the major changes that has been done for the current year filing of income tax return. Like the changes that were announced in the budget 2024 will be applicable here. So we will see what are the major changes here. So existing tax slab and deductions under the old tax regime is unchanged. There are no changes in your old tax regime. Whatever the changes are there, mostly they are for new tax regime only. Like whatever exemptions were there, deductions were there, like HRA, ATC, that will continue be part of old regime only. You cannot claim it under new regime. The enhancement that were done in the new regime were standard deduction, which is applicable to the salaried individuals. Earlier, it was 50,000 rupees. In old tax regime, still it's 50,000 rupees. Now this has been increased to 75,000 rupees under new regime. So this deduction is applicable irrespective of any proof of document you submit. So if you see your form 16, this deduction will be auto-applied. You don't have to opt it or select it. Next, there is a deduction called family pension deduction. So the limit of this deduction has also been increased from 15,000 rupees to 25,000 rupees. Next is your employer contribution to NPS. So earlier, this limit was 10% of your basic salary. Now this limit has been increased to 14% of your salary only under new regime. Under old tax regime, and for government employees, still it is under old tax regime, it's still 10%, and for government employees and for under new regime, it's still 14%. So this is employer's contribution to NPS. Like if you have opted in your employment for your employer to contribute under your national pension scheme, then this limit has been enhanced from 10% to 14% if you're opting under new regime. Then there were few changes that have been done in the capital gains segment. Like these are most capital gains. Like we have 5 heads of income while filing your income tax return. One is your salary head. Second is your house property head. Third is your capital gains. Fourth is if you're earning any income from business and profession or freelancing income. And fifth is any other. Like if your income is not falling in the first 4 category, it will go to any other. So now we are going to see the changes that have been impacted in the capital gains segment. So capital gain segment here, mostly like if you are doing trading or like if you're selling stocks, buying stocks, and if you're selling any land or building immobile properties or any other assets, if you're selling any ESOPs, RSUs, or if you're selling any foreign equity stocks, these all will be covered under your capital gain segments. So in capital gains, there is a concept of period of holding based on which your capital gain will be considered as long term or short term. So earlier we had 3 holding period. One was 12 months, another was 24 months, and the third was 36 months. Now they have removed the 36 months concept and we have only 2 holding periods, 12 months and 24 months. Like 12 months is applicable for your listed equity shares or equity oriented mutual funds. And for rest of all the assets, it will be considered as 24 months. If you are selling an asset which you have holding after, like if you hold it for 26 months and if you're selling after that, then it will be considered as long-term capital gain. If you're selling before 24 months, it will be considered as short-term capital gain. So based on this long-term and short-term, rate of tax will be decided and you will get accordingly your tax benefits. Then next change that they have done is they have removed the concept of indexation. So earlier they were non-listed equity shares or non-equity oriented mutual funds were eligible for indexation. Now they have removed the indexation concept completely. Only for land and building, there is an option. You can choose whichever is more beneficial. Otherwise, the indexation concept has been removed now. And next is your tax rate for your long-term capital gain, like your equity mutual funds and your equity stocks. Earlier it was 10% and now it's taxable at 12.5%. Earlier it was eligible, exemption was eligible up to 1 lakh rupees, and now that exemption has been extended to 1,25,000 rupees. So that exemption has been increased now. Next, there is also change in the tax rate of short-term capital gain. Earlier, all your equity shares and equity-oriented mutual funds were taxed at 15% if they are short-term. Now they'll be taxed at 20%. So based on this all changes, it's very important you understand like what are the changes applicable in your case, and based on which you file your income tax return. Can we move to next slide? Yeah. So now we'll quickly understand the difference between your old tax regime and new tax regime. So for old tax regime, your income will be taxed irrespective of your regime. Your income will be taxed based on the slabs applicable to you. So suppose if your income is 12 lakhs, then like 30% will not be applicable straightforward on 12 lakhs. It will be applicable based on the slabs. Suppose if your income is 12 lakh in our example, so 0 to 2 lakh 50,000 rupees, it will be nil, there will be no tax. 2 lakh 50,000 to 5 lakh rupees, it will be up to 5%. 5 to 10 lakh, it will be 20%. And more than 10 lakhs, that is in our case 12 lakhs, it was, so 10 to 12, that is 2 lakhs, it will be taxable at 30%. Similar way we have in new regime different slabs. So always the tax will be calculated based on the slab rates. It will not be fixed rate. But there are few incomes which are calculated at fixed rate, like your capital gains and all, for which we were discussing the tax rates, like long-term capital gain, short-term capital gain. Those will be calculated at the fixed rates irrespective of the slab that you're falling in. And based on your slabs, your surcharge rates will be decided. Like if your if your income is more than 50 lakhs, it will be 10%. If it's more than 1 crore, it will be 15%. More than 2 crores, it will be 25%. And more than 5 crores, it will be 37% in old regime and 25% in new regime. And on while after calculating the tax and surcharge, a special component called education cess will be computed at the 4%, and it will be added on your tax rate. Next, can we move to the next slide? So now we will take a simple example here. Like suppose if you are receiving a income from salary of 16 lakh rupees, and as we discussed, the standard deduction in old regime it's 50,000 rupees and new regime it's 75,000 rupees. So in old regime, your gross total income will be 15 lakh 50,000 rupees. In new regime, it will be 15 lakh 25,000 rupees. So in old regime, you will get the benefit of all the deductions, your ATC, ATD, ATCCD1B, ATCCD2, everything. But in old regime, these all deductions are not applicable. Only your employer contribution will be applicable. So old regime, your taxable income is 10 lakh 50,000 rupees, and new regime it's 14 lakh 75,000 rupees. If we go to next slide, I'll explain the tax calculation. Yeah. So for if we are seeing in the old regime, though the taxable income was less, your tax is coming up to 1,32,600 rupees. And in new regime, your taxable income was more, but still the tax is coming only up to 1,40,400 rupees. So there is a difference of 8,000 rupees only. Even after you claim all your deductions and all, still there is a difference of 8,000 rupees. If we go to next slide. Yeah, so now we will take a plain example where deductions are not there. Suppose if you don't have any investment, and then we will see which regime is more beneficial to you. So now in this case, your old regime income will be 15 lakh and new regime income will be 14 lakh 75,000 rupees. If we go to next slide. Yeah. So now for 15 lakhs, your tax is coming up to 2,73,000 in old regime. And for 14,75,000 in new regime, it's coming up to 1,40,400. So not only for 25,000 rupees additional income, your tax is drastically changing for 1,23,000 rupees around 1,23,000. So in this case, when you don't have any investment and if your income is falling under this bracket, so in this case, new regime is more beneficial. So it's always better you understand what all the investment that you are holding, try to understand it, then what all incomes you're having. So once you enter all these details in the clear tax, our software will auto select the regime based on whatever is beneficial. You don't have to worry like which will be the benefit more beneficial and what you have to select it. Moving to next slide. Yeah, I just want to raise one poll here. Can you quickly help me to understand like which platform do you use for filing your income tax return? I can see most of us are using income tax filing portal or through a CA or tax consultant. After seeing the demo or walkthrough of ClearTax platform, you will understand how easy it is to file on ClearTax. Can we move to next slide? So you have to log into cleartax.in. We have two options here. You can file your return yourself without any assistance. And the second option is you hire an expert where a tax expert will be assigned to your case and you have to give all the details to the expert and they will file the returns on your behalf. So you can go with any of the options. So we'll see the journey now if you want to file your return yourself. So once you log in, you have to click on start filing. And can we move to next slide? Yeah, so once you log in and you click on start filing, you will have to give your PAN details and your date of birth. So based on these details, we will pre-fill all your data. So once you enter your PAN and date of birth, and OTP will be sent to your Aadhaar registered mobile number. Once you get the OTP, all your details will be auto-filled on a ClearTax platform. You don't have to enter all the details manually. So once that pre-fill is done, you will get an option. We can go to next slide. You'll get an option to upload the form 16. So you might receive the form 16 from your employer. So you can upload here your single form 16, or if you have received your multiple form 16s, you can upload all your multiple form 16s. And even if it's password protected, you can enter the password and you can upload this form 16s here. Once you upload your form 16, we'll auto fetch the data from your form 16s and you don't have to enter these details manually. You can, at the right side, you can see the FAQs also if you have any doubt in any of your form 16. So once you enter all the details, here I'm showing the blank screen, but all these details will be auto fetched from your pre-fill and your form 16. You don't have to enter all these details manually. In case if you are not able to enter the OTP, but still you can proceed it entering the details manually. Can we go to next slide? So these are the different types of income. Like we have as I have discussed, there are 5 heads of income. This we have segregated and made it more easy for the user to understand, like your salary income, your interest income, your capital gains income, your house property income, your business income, and if you're doing any freelancing income from freelancing, if you're having any crypto income, these all details have to be filled in here. So if you're doing pre-fill and all, you don't have to enter it manually, and everything will be auto-fetched. So this is the screen from the salary card. So once you upload form 16, all these details, like whatever details are present in your form 16 will be auto-filled here. In case if you're entering manually, then we have many other tool tips and info icon which will help you to understand like where to enter what. If you go to the next slide. Yeah. Next is your gains from your mutual funds and stocks. Once you click on that, can we go to next slide? Yeah. So we support a number of brokers here. So if you're trading through any of this platform, you can download the statements from this platform and you can upload the statement directly here. We have also done partnership with many of the brokers where you can just autofill the data. You can just log into their account and you can enter the OTP where we'll autofill the data from those accounts, like your Upstocks and Paytm and all. So if you are not giving an option of OTP, then you can download the statement from their websites and you can upload those statements here. We are also provided the guide for you to understand like from where to download the statement, what statement you have to download, and you have to upload it here. Then if you have gains from your ESOP RSUs, and if you have done through Fidelity, then you can upload the Fidelity statements here. In case if your broker is not present here, then we are providing our own template where you can enter the details in those Excel sheets, and you can upload that sheet over here. Can we go to next slide? Yeah. So this is your house property. So in case if you're paying, if you're receiving a rent, and if you're receiving any rent from tenants, then you can enter the details. And in case if you're paying any home loan where the property is not rented, if it's self-occupied, then the details of the home loan for which you're paying an interest and EMI should be reported here. Can we go to next slide? Yeah, this is for rental property. If you are receiving an income from the rental income, then the tenant details and your rental income details should be reported here. And even if you're paying a home loan for that rental property, that should be reported here. Next slide. Yeah. So next is your interest income field. Like if you're receiving interest from your savings bank account, your fixed deposits, we have segregated everything very clearly so that you don't get confused. So all your interest income and everything will be reported here. Can we go to next slide? Yeah, if you're earning income from your freelancing, like if you're doing any freelancing income, then you can report that income over here. Even if you're doing any trading, intraday trading, or your futures and options trading, those incomes can also be reported. It's very user friendly to use. Can we move to next slide? So if you're earning any income from crypto or VDA, then here also we support the statements of few brokers where you can upload the statements of these brokers over here. We will auto fetch the details from this broker statements wherein you don't have to enter anything manual. You just have to upload the documents. Can we move to next slide? Yeah. In case if you want to claim any deductions, exemptions, this is the place where you have to enter the details of all your deductions, like your ELSS, your PPF contribution, your LIC premium, or if you're paying any medical insurance premium, all those details will be entered here. In case if you're receiving any carry forward losses from the previous year, those details will be entered over here. Can we go to next slide? This is a slide, like page inside the tax savings, where you can see your ATC, all your NPS contributions and everything, your medical insurance, your medical preventive checkups. All these details can be entered here. Can we go to next slide? If you have any home loan, or if you want to claim any other deductions, you can claim all those deductions. All your deductions are segregated into different category so that it's very easy for you to understand. Can we move to next slide? So as I was telling, if you have any losses from the previous year, so you can enter the previous year losses. If your losses are already present in your pre-fill, or if you have filed the return in the previous year through ClearTax, then we autofill these details also. You don't have to enter manually. Either we pre-fill from the previous year information or from your pre-fill data. If you want to enter manually, yeah, we have the option to enter. Can we move to next slide? Yeah. So this is a place where you can upload your form 26As. So once you upload your form 26As, all your TDS details related to your 26As will be auto-fetched here. And you don't have to worry in missing any of the details from your 26As. Can we move to next slide? So if you have any foreign assets, and if you wanted to claim any foreign credits, like if you have paid taxes outside India and you want to claim the double taxation reliefs, so you can report those details under this different schedules here. Can we move to next slide? So once you enter all the details, you can see that summary of all the details. Like as we have gone through the entire journey, never I told like select this idea form. Till now we have just entered all the inputs. So based on your input, we will auto select the ITR form. Whichever ITR is applicable based on your income, we will select it. We'll give the entire details, like what is your total income, your tax savings, everything. And we will also give the comparison on which regime is more beneficial, so that you don't have to worry like whether I should select old regime or new regime. Based on the inputs, the regime will be auto selected, but still if you want to compare it or switch the regime, we'll give an option to compare or switch the regimes. Can we go to next slide? Yeah. So we have also an option, like if you want to understand the detailed computation on how this computation, how the tax calculation is happening and everything, we give an option of detailed tax report. So you can click on that, and can we go to next slide? So you can see all your details. It's like you can download this statement as well for your future reference. You can see all the details. Whatever you have filled in will be shown here in a proper format. Can we go to next slide? Yeah. So once you fill all the details, and if there is any tax due, you have to pay that tax due. Once you have paid everything, you have to click on finish filing. Once you click on finish filing, can we go to next? Yeah. You have to pay the ClearTax platform fees. Once you pay that amount, can we go to next slide? You'll get a declaration page. Once you declare that everything is accurate, you will get an e-verify screen, which means your return has been submitted and you have to enter an OTP to e-verify your return. So once you e-verify your return will be submitted and e-verified successfully. Yeah. So this was it for the session. So we have also provided the email IDs. Can we keep that screen for a few seconds?
Yeah, I am sharing that detail
Yeah.
in the chat box also. Just allow me a minute. Till then, you can pick up the Q&As.
Yeah. I hope all the questions are answered by Sonam, but if still, I can pick them. Can you post it now freshly? If we have some RSUs, US company stocks, and if these stocks are not sold, do we need to declare it as foreign asset in ITR filing? Do ClearTax have the option to do this? Yes, as I have shown it in the slide, Schedule FA. So you have to report these assets in Schedule Foreign Assets. You have to declare that. If your capital gain is less than 1,25,000 and if you have only long-term capital gain which is less than 1,25,000, yes, from this year onwards, still you can file ITR 1 or 4. You don't have it to change it to ITR 2 and 3. HRA exemption and home loan interest both are different. Yes, you can claim both. If there are incorrect entries in your 26 AS and AS, you have to report it. You have to raise it grievance and correct it on the traces portal. HRA and LTA cannot be claimed in the new tax regime. How much charges to file ITR? You can raise it. We have special coupons. If you're, can we claim separate interest on self-occupied property and let-out property? If you have two different loans for two different properties, yes, you can claim. If you have partially self-occupied during the year and partially let out, then segregate the interest portion accordingly, proportionately, and you have to claim. If ATC, ATD, and HRA declaration was already done in the beginning of the financial year, but still it wasn't captured correctly in the Form 16, can I manually edit it while filing the returns? Yes. You can still manually change it them while filing your income tax return. Within how many days we will get the notification about any defect in filing? So it depends upon the department picking up the return for processing. So once the return get processed, you will get the defective return notice. If we have losses from futures and options, can we mention that in ITR? Yes, you have to mention the losses from your futures and options. Few examples like without further details will not be able to answer with very generic amounts. Can I get exemption on school admission fees? Yes, that is eligible for ATC only under old regime. Can we opt from old regime to new regime while filing the ITR? Yes, you can change your regime while filing your income tax return. So I'll also copy paste the coupon code and all the details, which are mainly for the Plexi card holders. So you can use these details while filing your returns.
I think, Nupur, there is one more question. I have not filed my returns last year. Can I
There are
file
many
now?
questions actually. I'm just scrolling.
Yeah, I'll pick up for you.
Yeah.
Can I fill now, and how much will be the penalty for late filing? That's one question.
Can you come back again?
I have not filed my returns last year.
Okay.
Can I file now? And how much will be the penalty for the last late filing?
So if you have not filed your last year return, you can still file it under ITRU, which is your updated return. It will not be filed as normal return because the due date for filing the belated return has already been over for the previous year, but still you can file ITRU. So your additional interest and your additional interest and penalty will based on the income that you are reporting. So everything, it depends on your income. There will be an additional interest of somewhere around 25% of the tax due that you have, and there will be a late filing fees of 1,000 or 5,000 rupees depending upon your income.
Okay, there's another question. Do I have to pay tax on rent received even if I come in zero tax slab?
If you come in zero
And
tax slab,
to add to it, the same person is asking on the capital gains as well.
if
So
you're
pay
coming in
tax on
zero,
rent.
yeah. So if you're coming on zero tax slab, then there will be no tax on your rental income. But in case of your in capital gains, depends on what type of capital gains. If it's still below your slab rates, then you'll not have to pay any additional taxes while filing your return. But it's better you declare that income in your income tax return and you submit your ITR without paying any taxes. Don't miss to file your income tax return.
Okay, there's another question. If we have share and we are holding them from the last 5 years and we did not sold the share, is tax applicable on it when I actually sold the shares? Okay, it's
Yes,
a very complex question, but
whenever you are selling the shares, yes, tax will be applicable. Like again, I told if what type of shares it is. If it's equity shares, then up to 1,25,000 rupees of gain, it will be exempt. And if it's other than equity shares, then yes, your entire income will be taxable.
there's another question. Can house maintenance be claimed on taxes?
House maintenance will not be claimed as taxes. You cannot declare it here.
Can I claim fees paid for foreign studies?
No, only the domestic studies will be considered.
So there's a question which I'm sure you can answer. Does clear tax have different charge based on income that one have?
Correct. Based on your inputs, the final platform fees will be calculated, and it will
So
be shown.
just for everyone's understanding, there is a link which is being shared. In fact, I'll share it right now. So that's a dedicated page for all Pluxee card holders. So if you open that link, there are multiple type of ITRs and the prices quoted on that entire sheet, on the entire page. So you can look up which ITR you fall into and accordingly, file your returns with the discounted rates which Clear Tax is providing you guys. Okay, there's one more question. Which ITR should I select if I have income from salary and agriculture?
How much is the agriculture income? If it's less than 5,000, it will come in ITR 1. If it's more than 5,000, it will go to ITR 2.
I work in a hybrid mode, work from home for some days and work from home from office for the other days. Can I claim both HRA for hometown and home loan benefits for city of job? So
Yes,
basically,
both can be claimed.
okay, there is, I think we'll pick up few more questions, like 2 or 3 more questions and then close. How to take tax benefit on rent?
This is not very straightforward. If you're receiving rental income, then you have to declare it, your rental income, like 30% standard deduction will be allowed. And if you're paying any interest against the home loan for that rental income, you can declare that. You can also declare your municipal taxes. So declaring all these deductions will reduce your tax liability in case of rental income.
Okay, this is an interesting question, and I'm sure many of them in the audience would love to save some more tax this upcoming financial year. So they would want to understand some tips from you on both the tax regimes. So if I am selecting old, then what are the tips you would like to give us? And if I'm selecting new, I'm sure many have gone to new tax regime, then what are the tips to save taxes?
So for the upcoming financial year, under the new tax regime, department has raised the slab rate to 12 lakhs. So if your income is up to 12 lakh rupees and if you're opting for new tax regime, then straightforward, you don't have to pay any taxes. So that's a very straightforward answer for the users who are having income up to 12 lakh rupees. They don't have to worry. And like if your income is falling above 12 lakh rupees, then again, depending upon your investments, like what all deductions you're having, like ATC, your if you're having any home loan, or if you're having any life insurance policies, or if you are paying any education fees, or if you are giving any donations which are eligible under ATG. So if you are having multiple deductions and all, then only old regime will be beneficial. So in the generic view, as far as we have seen, most like around 60 to 70% criteria is falling under new regime only. I would say more than 70% people, new regime is beneficial for the upcoming financial year. Only in the very worst case scenarios, like 20% or odd people are falling under old tax regime, where they are having huge deductions, huge investments and all.
Okay, so one last question we'll take, Nupur. What
Yeah.
is the tax applicable on ESOPs?
It's again like whether they are foreign listed ESOPs or Indian listed ESOPs. If it's foreign listed ESOPs and if it's short term, then it will be based on slab rates. And if it is long term, it will be 12.5% taxable. If it's Indian listed ESOPs, if it's long term, 12.5%, and short term, 20% will be applicable.
Okay. Thanks, Nupur. Thanks a lot. I'm sure many of us have got our answers. And those who have not filed their returns, I think the last date is 15 September. And we have onboarded Clear Tax just for you and your tax saving benefits. So make sure you make use of this value proposition which you have being a Pluxee card holder. So I'm copy pasting the link again in case you have missed it in the chat box there, because there are n number of questions still. So I have added Clear Tax POC, who will guide you in case you're stuck with in any kind of ITR. The link to view the different type of ITRs you have, along with the cost and the coupon code, which many of you were asking. And thanks, Nupur, a lot for this informative session. Thank you for being here. Thank you, all of you, for joining this session, taking out your valuable time out of, I'm sure all are working. We are also working. So thank you so much. Stay tuned for the next wellness session we'll have in the upcoming month. Thank you so much. Take care. Have a great evening. Bye.
Bye. Thanks all.